if you don't know what it costs, don't just assume it's expensive. Figure it out. Figure out, okay, maybe it makes sense. Maybe you self-insure. Maybe you get environmental coverage that's sudden and accidental only, not gradual, or you retain a lot of that risk. So maybe the first $100,000 or $250,000, or maybe up to 500 if you're a big organization, you insure, you manage those costs, but beyond that, catastrophic loss then gets transferred to an insurance company.
Welcome to the Environmental Transformation Podcast, where we bring you interviews with industry leaders, climate champions, sustainability practitioners, EHS and hazmat professionals making an impact in their businesses today. Each leader solving complex challenges and delivering solutions within their areas of expertise. I'm your host, Sean Grady, and thanks for joining us today. Before we jump in, make sure to follow us on your devices and visit my website at www.seankgrady.com and sign up for our newsletter and email announcements. Now let's get started. Welcome to the Environmental Transformation Podcast. I'm your host, Sean Grady, and today's guest is John Wasilchuk. John is the director in the environmental practice at Gallagher Risk Management Services, and he helps organizations with to evaluate environmental risks, profiles, manage their property and casualty insurance programs, where he supports risk management, claims support, and marketing and designing insurance programs. John also began his career in 2004 as an environmental consultant, and he's got a big background in doing phase 1, phase 2, and site assessment cleanups and remediation projects. So he's familiar with our business. John, welcome to the show.
Good to be here, Sean. Thanks for having me.
Absolutely. No, this is good. Well, John, for the listeners, real quick, let's do give us a little background on yourself. Where'd you go to school and how'd you get into the insurance business?
All right. Well, I'm a Long Island native, attended Indiana University, and after starting as a business student, pursuing that degree, I took a couple accounting classes and realized that science was more my thing. So got a environmental management degree, which was a mix of science, policy, and business, and took that to the real world. Started my career as an environmental consultant after learning a lot, seeing the country, doing a lot of different things. Just wanted a little bit more stable of a life with regard to travel. Some people that I had met along the way that were also consultants had transitioned into insurance. They said it's pretty smooth transition. Your education, skills, experiences, they'll all relate well. So made the leap, and I've been a broker, served as an underwriter for a bit, and now I've been at Gallagher going on 5 years this fall.
Oh, okay. That's fantastic. That's fantastic. Well, you and I met at the EI Digest conference out in San Diego last year, which was a big gathering of the industrial hazardous waste businesses across the country, from, Veolia and Clean Harbors and Waste Management and Republic and everybody, kind of coming in and summarizing a little bit of their, 2024 successes, and then where their strategy is going in for 2025, and just the condition of the market in the industry right now. There's a lot of consolidation going on, and insurance was a topic that came up, and you presented, and maybe share with the listeners a little bit about what you spoke on, and the benefits to environmental insurance for companies like industrial waste companies or anybody really.
Yeah. So just my background as an insurance broker, I I basically connect our clients who buy insurance with the insurance carriers who provide it. So that's property, casualty, environmental focus. I'm because of my background, because I understand the business or the risk, I like to work with companies that have an elevated environmental risk profile and help them find solutions. Just like everything, you can't be good at everything. You got to be focused, got to be specialized to deliver the best results for your client and in whatever you do. And at the conference, the topic I spoke on was just how do we improve outcomes with insurance? Being We've got adverse factors that are weighing in on it. On the property side, obviously, um, look no further than the recent wildfires, the increase in frequency and severity of storms,
Oh yeah.
um, and then the casualty side, which is kind of everything else your business might buy, particularly with auto, and then the excess coverage, which provides limits over most or all of your other lines of insurance. Um, it's been rough too, and the verdicts that we're seeing in the courts related to auto incidents, among other things, product issues, um, you know, bodily injury claims, whatever it is, but really, in particular, auto, they're huge and they're unprecedented. The insurers are getting hit and they're passing that on to the buyers. So um, what I spoke to was just, how do we solve that problem? We can't guarantee that we're going to get your rate decreases, but if we work together, if we're organized, we can certainly help you beat the market. Um, and that was it. It's really, this is your risk profile today. Here's all the things that you're doing. Here's all the tools you can implement. Or here's just the data that you have to show insurance carriers what you're actually doing, how you're constantly improving, so that we can show them this is the risk profile of this company. It's market leading. It's one of the better ones in this class, and you should want to insure them, and you should reward them with a favorable rate and broad coverage.
So when you talk to insurers, well, should I say when you talk to the companies who need to buy the insurance, and you talk about getting your data organized and straight, do you see that as a big obstacle for a lot of companies, is pulling that information together so that they can actually demonstrate to the insurance companies they do have procedures or things in place, engineering controls that kind of help mitigate risks and basically build the story or the case that they should have a better preferred premium for the coverage?
Yeah, it's some clients, some prospects we talk to, they're all over it. They're really good, but we need to bring together the data that the EH&S people have, with the finance and the risk management and safety, bring it all together to show the insurer the real profile of the company. Here's what's going on. And that sometimes is the disconnect, is what's happening in the field may not make its way back to the risk management or finance team who are dealing with and negotiating with their broker to get the right insurance coverage. So it's kind of connecting the dots. There may be gaps that we need to fill, but ultimately, you know, a good, thorough, easy to understand package of data that an underwriter gets so that they can look at, Sean's podcast company is, here are the risks, here are the losses, here is their safety program, here's what they're doing when they have an incident, whether it be a near miss or an actual injury or worse. Um, Here's what they're doing to improve. They're learning lessons, they're applying them. So we think they're a great risk. Not everyone's doing that. Not everyone's showcasing that. In some cases, companies are kind of afraid, or maybe they want to withhold some of the near miss data where it's nothing happened. There wasn't a
Hmm.
claim.
Hmm.
Um, but to me, and as a former underwriter, I look at that as like, we all know stuff happens. We know things are happening in the field. Could be a minor cut. But when those happen, are you integrating that lesson into your tailgate talks? Is it going, across the entire company? And really, it's just, we need to know all that. We need to communicate that with the carriers so that they view you appropriately, not just stick you in the, stack of average risks.
Hmm. Hmm. So I'm thinking of a company in a scenario where they have a lot of environmental liabilities. So they've got, let's just say they have a whole portfolio of legacy sites with environmental cleanup obligation. What type of information are you requiring for ensuring those types of firms under those scenarios to help them do the best they can to cover their risks? Because I'm sure you're having conversations with some big companies that have that scenario, And what's the best advice you have for them?
So, uh, thorough due diligence, right? You've gotta have a process in place anytime you're considering acquiring a property. Most companies do. If they don't, their lenders are going to really lead them in that direction. You don't want to buy a property without conducting due diligence. You don't want to buy a company with a large portfolio of sites without understanding what liabilities you might be buying. Have a process, have a an established, reputable consultant perform those. Um, Usually easiest if you have.
Like WSP. Yeah, yeah, for sure.
There's this firm WSP. They're great, and they have some of the best
Top
people in the
top
Midwest.
company. Yeah.
um, but yeah, it's do the due diligence, make sure that data is available before you're going to close on a property, because we don't want that part of the insurance evaluation to be an afterthought. With so many M&A deals, we'll
Uh-huh.
get the phase one, we'll get a draft phase two, or just the plan. It's 3 days before close. Maybe it didn't get to the environmental team at the brokerage, and that could hold up the deal. Um, and the more time that we have to work with the environmental underwriters at the different carriers, the better the results are going to be, to
Mhm.
protect against whatever known conditions we have. So, say you've got a chlorinated solvent plume under a site, the carriers aren't going to want to pay for any cleanup associated with that. But if the water's not potable, there's no sensitive receptors, maybe we can get coverage for bodily injury, maybe for property damage, um, legal defense, other elements of the risk, and then potentially anything that's unknown that we didn't find in the phase one, or contaminants of concern that were not identified in the phase two. We may be able to get coverage for cleanup of that.
Mhm. Yeah, no, that makes sense. I just kind of wondered how companies say have I don't know. A lot of these companies have a lot of manufacturing sites, and they're in various stages of maybe a potential cleanup, or they've acquired a couple companies that had legacy information, sites that came to them through an acquisition, and now they're holding a few properties that they really don't have a lot of background on or never had historical, activity there, but now they own it because they acquired another firm. The that type of information, I'm sure when they go to find an insurer, they need to have a really solid summary of site conditions, expected cost to remediate, how long will it take, what are the agency or public, stakeholder concerns. I'm sure you're asking all of those questions as you develop a plan to provide insurance coverage for companies like that.
Yeah, absolutely. And it's sometimes the contamination is at a level, where we just know it's like there's very little we can do to insure against the risk of this, because it's in bad shape. It's a true brown field. Um, Not a lot we can do, but maybe post remediation, we can provide coverage for anything that was left in place. So, if you went slab on grade and you had a vapor mitigation system in place, um, we could insure against a bodily injury claim for any vapor that may intrude into the building, um, at post construction. Um, there's a range of what's available. Every site is different, and that's for kind of the historical use. Um, but what we can always get coverage for is if it's been thoroughly investigated, it's a quality phase one, or two, and something is missed, we'll have coverage for those missed incidents. Ultimately, you're going to probably talk to your consultant, see what they can do for you, but they're always limited assessments. Things are going to get missed, and if one of those issues, rears its head, um, potentially you have insurance as a backstop. But kind of on the other side is, if you're operating these sites, of course you're going to have property insurance. You're going to have general liability, auto, cyber, work comp, these other lines that people are thinking about more and more, especially with the cyber. Everything else is just kind of what you need to run a business to get a loan from the bank. But environmental insurance is often one place that's overlooked because your general liability policy is going to exclude it. Really, RCRA is the line where post RCRA carriers were excluding environmental liabilities from their policies because once regulations got to the point where there were actually teeth and people were getting fined, people had to clean up that strict liabilities imposed. Carriers were like, we didn't plan on this, this was not part of our underwriting process. We were
Right.
like slips, trips, and falls, explosions, things like that, but environmental liability wasn't there. So the general liability carriers exclude it. Environmental liability insurance was created to fill that gap. Um, and for the new conditions, if it's not part of your program, it could be combined with your general liability or just a separate policy. The new conditions coverage, you can get to be extremely broad, where it's any release. It could be a sudden and accidental release to gradual over time. Um, but for any new issue that you may encounter, um, insurance is available. You just got to explore the marketplace.
Hello, ET Nation. I want to thank you for listening to the podcast. If you enjoy the interviews we bring you, please consider supporting the program by visiting my website at seankgrady.com and buy me a cup of coffee. Proceeds will go towards helping me continue producing timely content and offsetting production costs. I'd also like to take a moment and recognize a few of our sponsors of the show who have been amazing partners and who are ET Nation legends. If you're looking for a driller and an environmental contracting firm to help you delineate the extent of contamination at your site, then look no further than Cascade Environmental. Cascade has over 37 offices across the country and offers a huge range of environmental and geotechnical drilling, site characterization, and remediation services. With their huge fleet of equipment and nationwide coverage, Cascade is a great choice to support your environmental and infrastructure needs. To learn more about their company, visit their website at cascade-env.com. That's cascade-env.com. I'd also like to give a shout out to Enthalpy Analytical. If you're looking for a single source for all your laboratory testing services, then give Enthalpy Analytical a call. With their network of accredited laboratories, experienced project managers, chemists, and industry professionals, they have everything you need to support your next project. They can analyze anything from drinking water, groundwater, soil, sediment, sludge, air, and much more. To learn more about Enthalpy Analytical, visit their website at enthalpy.com. That's enthalpy.com. Finally, I'd like to recognize Zappa Stewart, the leading provider of superabsorbent polymer technology for the power, dredging, oil and gas, and remediation sectors for over 20 years. When a reliable, fast, and cost-effective liquid waste solidification solution is needed, customers count on Zappa Stewart's brand of SAPs and technical expertise. When liquid waste needs to be out of sight and out of mind, give Zappa Stewart a call. To learn more about Zappa Stewart, go to my website at seankgrady.com. That's seankgrady.com. Now, let's dive back into this interview. I got to imagine, John, that, the frequency and the severity of these climate change related weather events are now becoming so massive and so damaging and impactful to communities and insureds. I gotta imagine the pricing of environmental insurance and premiums are just they're going up more and more every day. What are you seeing the effects of climate change on the insurance market?
So, I mean, property, obviously, ensuring the structures that are in a wildfire prone area or coastal, they're going to see increases. We're also seeing, regardless of what the cause is, we're seeing more frequency, more severity of these instances, and convective storms are another one throughout the Midwest and South and all over the country. So, hail, tornadoes, straight line winds. We had a derecho that rolled through here 5 years ago, west of Chicago. Those are happening more, and they're um, loss leaders for the property carriers. It's a higher percentage of losses paid we're seeing now from convective storms versus the big events that everybody sees. It's these large losses in smaller geographic areas that just don't have the same, it's not the coast of Florida, it's not high population center.
Mhm.
Those are an issue that's increasing everybody's cost with property. Anytime you're going to have a property loss, you got to think about environmental. If you're, any business that deals with any larger volumes of any substance, whether it's a hazardous or non-hazardous material, anything in a high enough concentration in the wrong place is considered a pollutant. If you're concerned about property, be concerned about environmental. Fortunately, the environmental market, while we're seeing increases, um, a lot of it's due to inflationary factors. Just things cost more. But
Mhm.
overall, the rates have been kind of the shining star in renewal talks, because while they're up, um, it's usually, much more modest than what you're going to see on property, what you're going to see on your excess liability. Um, so if you don't have it, don't think, well, that much cost a lot. At least explore it. At least know what it costs and make a decision. I think with any line of coverage a business doesn't have,
Mhm.
cyber, some sort of management liability line, environmental, if you don't know what it costs, don't just assume it's expensive. Figure it out. Figure out, okay, maybe it makes sense. Maybe you self-insure. Maybe you get environmental coverage that's sudden and accidental only, not gradual, or you retain a lot of that risk. So maybe the first 100,000 or $250,000, or maybe up to 500 if you're a big organization, you
Mhm.
ensure, you manage those costs, but beyond that, that catastrophic loss then gets transferred to an insurance company.
That's good to hear. I mean, the a couple of scenarios recently have been coming to mind that I'm just curious about your take. I know of an environmental contractor who recently had a fatality at a site that they were working at for a client, and that's a big deal, right? I mean, loss of life. They're working at a project. Their own people went in, and the guy overcame. He was overcome by fumes, and couldn't get out.
Hmm.
Um, what type of insurance claims are you seeing in that space, and how are they affected in their policies for those type of protections for companies who know they're working at high hazards? Like,
Yeah,
this is not a company who doesn't work at high haz. I mean, they work at high haz all the time, right? So there are known risk for these types of things, but I'm sure they're still trying to have insurance protect them too, right? So how does
of
that work? And
course. And this was the contractor's employee, their own employee.
yeah,
So it's workers' compensation is gonna apply there. I mean, that's unfortunate. Just it's the worst. I mean, everybody expects that you can go to work, come home safely to your family, and
absolutely.
that's tough. It's a challenge. It's a reality of some careers. Unfortunately, you can't make everything perfect, but again, they're you're going to be able to get workers' compensation insurance no matter what. Rates will be up. One incident, you're going to see some rate increases, but it's really trends. It's more frequency type of losses, where it's like we've had 9 crush injuries this year on people on a factory floor, or you know 8 lower body injuries, or 20 people have lower back injuries, multiple deaths, or really severe bodily injury cases. Um, Insurers are then really going to have to be like, all right, like we'll consider this, but we might need to restructure the program. You might need to take on a bit more of that risk. You have to pay for it. But kind of going back, it's incidents are going to happen. That's what insurance is for on any line. What are the lessons you learned? How do you ensure that you're not going to make that mistake again,
Right.
as the goal?
Yeah.
And
Yeah.
and don't don't shy away from having those conversations. You got to get in front of your carrier. We love to introduce our clients to the carriers so that they can tell the story and help them understand we're going to be better because we never want to have that happen again.
Situation happen. Yeah, right. I
Yeah,
mean, I'm
I
sure
mean,
too, those types of situations, as bad as they are, um, also are going to elicit some sort of response for these companies to, increase their safety programs and everything else. And sure, I'm sure this insurance premiums going up will be an additional incentive, but it won't be the driver. It's really the personnel, the safety of people. But yeah, you got to imagine that's a big part of it. Another scenario I was thinking about is I think this is probably going to fall more in the environmental side, but let's just talk about this scenario. Say you have a big solar farm or a wind farm, and what types of risks and insurance coverage should be assessed, or should one think of if you're one of those types of entities to cover? I can imagine there's some environmental risks. There's probably, a general liability operating risk. I mean, there's property, obviously. So I mean, just maybe talk through that a little bit.
yeah. So if you own the property, you buy
Or
the
you lease it.
property and then you're
Maybe you lease
developing
the
it, or
property.
okay. So, it's your equipment on the site. You've got to ensure that. You have to have some general liability, for any impacts to third parties. Um, Environmental, I know your audience wants to hear about that, especially, that's part of it. And, you know, it's in that case, it's not really like a pollution incident. It's maybe legal defense is the most important thing, or natural resource damage claims.
Yeah.
Um, those are gonna be more frequent on that side of it. Um, or long term, did installing that, create a pollution condition somehow? Um, but it's really it again, going back to costs, you're gonna get your core business insurance, your property, your general liability, your auto, your work comp, anything that's applicable for that operation. Um, Environmental's kind of ancillary in some regards, but on a property where you don't have million-gallon ASTs, there's not a high hazard process with pressure and chemicals. Um, you'd be surprised how cost effective it is. The price you'll pay for $1 million in limit, and the price you pay over time, because often we can get for that site where you have the solar farm, um, you have the turbines, you can get that done over multi-years. So you could get a $10 million limit policy, but you could spread the limits over a 3-year period, maybe a 5-year period. Um, some carriers used to offer 10, not so much anymore. But you can get multi-years. That doesn't mean you get that limit, $10 million year 1, 2, and 3. If you were to have a $10 million loss year 1, you're out of limit. But in the environmental risk world, we think of these as low frequency, high severity typically. In A solar farm is not going to have a lot of losses, a lot of claims made, but if they do, it could impact their balance sheet.
Okay, well, let's talk about another type of scenario. We're just kind of running through the scenario of insurance. It's, name that insurance type game here a little bit, I think. Say you're a waste broker.
Yeah.
What type of insurance do you recommend for a waste broker who hauls waste, picks up hazardous materials, and, that is their core business, along with some, environmental contracting capabilities?
Yeah, so there's property general liability. Everybody knows that. You've got your fleet if you're moving them yourself, so it's your auto. Um, there's gonna be some professional liability for the brokerage where you're the agent, getting the waste on a truck to the right place, making sure it's handled correctly. And the big one wrapping around that's going to be environmental. It's either going to be if you have sites where you have an exposure where you may, have a temporary holding facility, you may have a TSD, whatever it is, you've got your site risk. Outside of that, you have what's being moved around and where. Um, so you want broadened transportation coverage. On your auto policy, you're going to have some limited coverage if structured well for pollution. Um, but an environmental liability policy is going to specifically cover pollution from transportation from any cause not just upset and overturn, not just from an auto either. It could be barge, it could be rail, it could be a plane. Um, One of the terms a carrier uses is conveyance, and conveyance really means anything short of, a spaceship.
Yeah. Yeah. Well, I guess Elon Musk is conveying some materials and
Y-
satellites to the outer space, so maybe he could claim that. I don't know.
Yeah.
uh,
In there too, you're going to have disposal liability. If you're the
yeah.
broker, you're not the generator, you're not the ultimate disposal site. So you should not have liability, but you never know. You never know. When there's no one else to ask for money in the case of waste was dumped or the disposal facility is insolvent, who knows, depending on the state you're operating in, depending on the attorneys involved, you may have some liability there for disposal. And at least with an environmental insurance policy, you'll get some defense costs paid. Um,
Yeah.
but really, it's broadening the transportation, make sure you got the site liability, um, because uh, you don't want to get stuck holding the bag on a big cleanup.
So let's just say another scenario here. For instance, maybe, I think there's been a trend of late where you've got these environmental transfers. So
Hmm.
people will buy the liability of a bunch of assets, take ownership of these properties. They will get paid through an insurance vehicle, whatever those values are, I think, or paid by the owner of the properties to go and clean them up, and then they own the property. What
Hmm.
type of insurance policy would those types of projects? And have you ever come across that type of
Yeah,
scenario?
yeah. So, and I'm familiar with some of the environmental liability transfer companies that are willing to do that, and love what they're doing. Love that they're, turning brownfields into productive sites. Some of them are rejuvenating urban areas. Um, that's great. Typically, those sites that they can get when someone's willing to give you the site and it's 100 acres for $1 and it's on a river, that's valuable property. But for all the cleanup and the known and unknown costs, so carriers will consider providing you coverage for if you exacerbate what's there, right? Even if it's during your investigation process, if you're running a geoprobe or putting some wells in, and you were to bring a chlorinated solvent plume from a confined aquifer into the bigger aquifer, you're exacerbating something. So maybe that's paid for. No one's really in the business at all anymore of paying for cleanups of what we know. Um, those sites, again, they're so impacted, so much historical use that's concerning, that cleanup's probably not what they want to give. But claims for bodily injury, claims for property damage, maybe claims for off-site cleanup should the plume migrate, or should some sediment be disturbed. If you've got metals on the surface and you're moving earth around and there's a rain event and your stormwater management plan fails, maybe there's cleanup if those migrate off-site. Um, but bodily injury, property damage, those are going to be the big ones that you may be able to get some defense costs baked in. And then transportation for any of the contaminated media that's moved off site, disposal liability in the event that your disposal facility has a cleanup, they're insolvent, that liability is going to come back to you. So those are typically available in that scenario. And then once the remediation is complete, your site is capped, or whatever you're doing to get it back to operational use, then you can probably provide some reopener coverage. So we remediate everything, the site's good, we brought in clean fill, we've capped certain areas, we're managing things in place, hotspots are gone, the site says you're good to go. um, if in 5 years or 10 years they come back and they say, well, the cleanup objective for benzene was, 5 parts per million at that time. Now it's one, and you need to go further remediate. That reopener uh, could be covered by an insurer.
One of the, I think, challenges that a lot of generators have in today's environment, so to speak, is cradle to grave concept, right?
Hmm.
So they send waste to a firm that does what they think is the proper way of disposing of it. Down the road, the firm goes belly up. And
Hmm.
now there's an investigation to clean up that site. And under CERCLA, those companies can get pulled into addressing contamination of the site for a location they sent waste to. What type of policies are covering those and protecting those generators under that scenario?
So your environmental liability should be providing that disposal liability coverage, which is for just that. And we've seen the claims. We've seen them on active companies. I've seen them on acquired businesses, um, where our client acquires a business, they get all these locations. 5 years in, or whatever the time frame is, they get notice from the EPA or the state regulator stating that this facility has had a breach from the landfill liner, and there's an extensive cleanup, and it's impacted this area. Um, Costs are anticipated to be X. You can settle now for $50,000, or you can participate going forward for 3% of the cost, which is the amount of waste you contributed to that cell, um, for an example. So it's in those cases, insurance carriers are more likely than not to be like, let's just settle, because it's probably a smaller number. We never know what a cleanup is going to cost.
Yeah.
If they need to defend them, that is hopefully built into the policy if structured right. But that disposal liability, it never goes away, and it is insurable.
The big elephant in the room as it relates to the environment right now, and a lot of people are struggling to probably imagine you guys are too. Like, how do we insure this stuff? Is PFAS.
Yeah,
You know,
yeah.
let's talk about that. And where do you see the industry going in this area?
It's not an emerging contaminant anymore. We know about it. It's there. It's real. We all have it flowing through our blood, right? It's everywhere. Those compounds. Um, First off, general liability carriers, for the most part, are excluding it broadly. So they'll exclude pollutants. Now, PFAS, just a general definition or a list of all the compounds, or both, is included in that. So you can't look to your general liability policy for coverage anymore. Many environmental insurers, not all, are also excluding PFAS. Now,
Mm.
where you can get it back is if you have the right due diligence, if you can show that we've never utilized any of those substances in our processes on our site, and whoever was here before weren't using them too, then maybe we can get some pretty broad coverage for that. Um, if you don't have data, it's going to be tough. Insurers don't necessarily just want to make assumptions that you're a good risk. They want you to show them that you are. And then there are a small subset of carriers that will consider some pretty challenging things. Some will consider providing environmental liability for a company that may use PFAS somehow in a manufacturing process. Um, they may consider providing coverage for your products that contain one of those substances. So like electrical tape or something like that. Probably not a consumer good, um, but there's you got to know your risk. You got to be open. You got to be willing to spend some time talking to the carrier with your broker. Talk to the carriers, so that you can demonstrate we know what our risk is.
Right.
We manage it well,
Right.
and it's not a roll of the dice with us. It's a calculated assessment of what's the likelihood of a claim. But
So even
it,
even if you do have PFAS, you can be insured. It's just maybe not to the limits you want, and your
it's
premiums might be
possible.
more.
Yeah, I mean, I don't want any to get anyone's hopes up completely, but they're especially if it's not long-term use, you need to be able to tell what's new and what's old with any contaminant. With PFAS, it's more challenging because they're, forever chemicals. We don't know where they're coming from. They're really bad for human health and the environment.
There are
Um,
forensic tests that can be done to speciate the actual PFAS chemicals to so if you know what type of you use versus the type you're finding, that
mhm.
could help, but you'd have
Yeah,
to be pretty clear about that.
but then you have the whole commingled aspect where it's like, well, if we have to clean up this, now we're cleaning up this other contaminant, whatever it could be. So insurers are going to be skeptical. I just say, like, if you know you have a problem, you're probably not going to be able to get insurance. Um, if you if you have a baseline that's favorable and you know that they're part of what you do and they're a risk, uh, explore your options, see what you can get.
Sure.
There are some carriers that are willing to listen. Some are just like, it's a hard no. Um, but it's
Basically, somebody that's needing that type of support, they're calling you to help be that leverage or that communicator between the carriers, right? They're kind of having you help them explore those options,
yeah, exactly.
present their case.
That's our goal. It's we go out, we go to every carrier that could potentially consider it. We find the ones that are interested. We narrow that down to a few, and then we really need the partnership of our client to help us help the carrier understand, how you're managing the risk, what you're doing to mitigate the risk, um, volumes, processes, everything, so that they can in turn hopefully get comfortable and provide you with some meaningful coverage.
So you're kind of helping coach up the insurers to, like this is what you need to do and prepare this information for the insurance companies to have the best outcome. And this is
Yeah,
what we're going to need to do. So you're coaching them up and helping them understand what's the best approach to be successful at finding the best in coverage and the best premiums.
exactly. I mean, whatever it is, whatever line, whether it's whatever your concerns are, that's our goal is just help you tell your story. You want the carrier to be celebrating your successes, understand where there's areas for improvement, but you want to be open, you want to be honest, you want to provide them with a great data set, and show them that you're on top of things. That's what they really want to understand, is
Yeah,
that you're
yeah,
on
yeah.
top of your risk and you're proactively managing it and trying to be better every day.
So I gotta imagine listeners who are hearing this episode, there's probably a couple insurance buyers that are listening. I mean, people who need insurance that doesn't know who to, reach out to, and they haven't really felt like they've found a broker that understands their environmental challenges. Uh, Sounds like John, you're the right person to talk to about these things.
Yeah, I'm happy to talk to anyone. Just, help understand what they're doing, understand what their challenges are, and hopefully, if we had the opportunity to work together, find the right coverage and create a long-term partnership. But we've got a great team, got a lot of support, and there's really nothing globally that we can't help you solve.
Oh, that's awesome. Well, what's the best way to get a hold of you, John, so listeners can reach out and connect and maybe find a better solution and a better carrier for the insurances?
I mean, kind of up to you, Sean. We could post it. I could spell out my email.
Let's do that for the listeners. I will put John's contact information on my website, and we'll also tag him in our subsequent posts that we get out to LinkedIn and to other parts of the World Wide Web and on our social platforms. John, hey, you've been a great guest. It's helping break down environmental insurance and some of the challenges around understanding the risk associated with bringing this information to a broker like yourself and identifying the right coverage and what type of coverage covers what, whether it's general liability, it's environmental, it's transportation, it's, all kinds of stuff. And climate is playing a role in some of these risks that we're dealing with. And I think having companies understand what they need to do to protect themselves or prepare for this. And we did, touch on one that you touched on. I didn't really mention it, but cyber risks are probably one of those that, cybersecurity is a big risk, I think, these days that people are sleeping on a little bit as well. And I think that's another area. So it sounds like you can help them in that space as well.
Yeah, and that's we've got an awesome cyber team. That's I can speak for a few minutes about it. But we've got again people that are focused on that line of coverage, have the right relationship with the carriers, and can help any organization understand what their risk is. If they have the proper procedures in place and protections, help improve upon that, and then just get them engaged with the carriers. But yeah, it's not as overlooked as it once was because everybody's heard about it. You see the big data breaches. Um, so it's often contractually required for a company you might be doing businesses with, but in some cases
Yeah.
it's not. And
Yeah.
just, that market was crazy a few years ago. People would get renewals that were like 100 to 300, maybe more percent rate increases with less limit. And it's stabilized a bit. So worth exploring also. If you
Okay.
had an experience in the past and it wasn't great and the costs were astronomical, worth talking about it again, so that at least if you're self-insuring, you're making an informed decision to do so. And just through the underwriting process, through the exploration of does this insurance make sense for my business, you're going to learn a lot about what you can do to protect yourselves from those attacks. So insured
Yeah.
or not, you're going to learn about how to have a more resilient business.
Well, that's great, man. John, I really appreciate you coming on the show and educating our listeners about environmental insurance and insurance in general, and the need for companies and businesses that are operating and to help manage their risks through these policies. And I'm glad you are available for them to help understand the nuances of these various insurance policies and help advocate for them. So appreciate you coming on the show and all the good work you're doing at Gallagher. We'll look forward to getting you on the podcast and promoting it. And thanks for coming on the show.
Thanks for the opportunity, Sean. This was a lot of fun. And yeah, look forward to seeing you next time you're in Chicago or I'm down your way.
Thanks for listening and watching the show. If you enjoyed the show, then please share it with your friends and coworkers on social media and tell somebody in person. Thanks for being with us, ET Nation.